Well, SBI is clearly going to be the stock of the day. Remember, the stock is at a 52-week high, but the numbers were spectacular. Goldman Sachs, in fact, said that this is arguably one of the best earnings that we've seen in this season. So let's go straight to Abhishek to tell us more about what went so right for SBI this time around. Abhishek, over to you.
Well, Sonia, to begin with, it's ticked all the metrics that you can write in the banking sector. So ROA has crossed 1% level, perhaps for the first time in the history of SBI. Bank has reported the highest ever quarterly profits, which led by the fact that, loan growth is at 19-quarter high. Foreign business growth was robust. By business, I mean both the deposits and advances, growing by 31.5% YOY and about 9.1% quarter-on-quarter. The net interest margin is one of the best in last 7 years, coming in at 3.32%. With domestic net interest margin of 3.55%. The gross NPA ratio, or overall the stress portfolio, is one of the lowest that you are seeing in last many years. Gross NPA ratio being the lowest in last 7-8 years, coming in at 3.5%, and net NPA ratio perhaps for the first time ever has been below the 1% mark. ROA and ROE both are one of the best that you are seeing in last 7-8 years. In terms of PNL, both the NII and PAT is a beat to our poll. NII beat of more than 6% and PAT beat of more than 35%. Back to you.
Okay, all right, Abhishek, thanks a lot for that. Let's go across to Mangalam. Mangalam, Titan's numbers look good. The problem is how much is in the price, right?
That exactly is the concern. These numbers are solid gold, but just some of the shine perhaps is, is not sustainable going forward. If you just take a look at the numbers, 8,700 crores on the top line versus our expectations of 8,450 odd crores, EBITDA higher than expectations, and that has percolated all the way to the bottom line as well. The revenue beat, of course, was led by additional sale of gold ingots, which is recognized as other operating revenue, which has come in closer to 500 crores versus 200 odd crores. And the jewelry business saw one-off gains of customs duty as well as inventory gains in their diamond business by about 2%. So to that extent, the management believes that going forward, the margins in that business will be around 13 to 14%, as against the 15% that they've done. And investments in the eyewear business will also keep the margins a little controlled in the next half of this year. However, the festive season, the company saw 18.5 to 19% sort of growth. They've refrained from giving a Q3 guidance. The big question again is that the stock is at near all-time high. FY24 earnings, price to earnings multiple is 64 times. So yes, it is solid gold, but it's trading at the price of diamonds, perhaps.
All right, well put, Mangalam. Thank you very much. By the way, you can hear from the Titan management straight up in a bit from now. So Titan's CFO, Ashok Sonthalia, will be with us at 9:45 to take some questions in terms of sustenance of this very strong growth. And a couple of other things as well.
So Mangalam said that it's trading at the price of diamonds, right? So we should be a bit careful, because when you go in for resale, gold gives you a better resale than diamonds.
Well, so yeah, absolutely. And we'll put some of those diamonds and gold questions to Mr. Sonthalia of Titan a little later. Power Grid also reported numbers. Vaishta is here with a quick snapshot. Vaishta, hi, good morning.
Hi, good morning, Prashant. Well, Power Grid for Q2 FY23 been a steady quarter for the company, broadly in line with estimates, but there's been some mutedness in the capex spends, which have come in at 3,200 crores in the first half of the ongoing financial year. The revenues at 11,000 crores is up 9%, better than estimates of 10,700 crores. Margins have come in at 84.5%, a bit below estimates. The company has declared an interim dividend of 5 rupees per share. So all in all, seems like a good quarter. I would go with a green on the stock.
Okay, all right. Thanks a lot for that, Vaishta. Well, Mangalam, coming back to you. Britannia, numbers good, crunchy enough?
The numbers were crunchy enough, though there was some lack of crunch in the balance sheet. So let's talk about the, P&L for the company. It's an inline volume, but across all other parameters, it's a strong beat. It's the highest ever quarterly revenue that the company has reported. Gross margins have improved both quarter-on-quarter and year-on-year. And the company's market share, which is an important metric, is at a 15-year high as well. They've gained market share for 38 quarters in a row. As a result of which, revenue is close to 4,400 crores. The street was working with a number of 4,100 crores. Margins at 16.3%. The street was working with a number just around that under 15% mark, and the net profit is higher by about 70-80 crores as against the street expectations. Now the balance sheet, the long-term debt of the company has increased by about 1,000 odd crores. But I wrote to the company, and company sources have told me that they've borrowed these 1,000 crores to fund capex in their dairy as well as greenfield projects in UP as well as Tamil Nadu. And the borrowing cost on this is 5.8%, which is about 200 basis points lower than their own treasury. So they thought this was prudent. However, the street is worried about them having raised funds to perhaps give out dividends to investors, etc., and part of which could be to help the promoters, etc. too. So these are things that we'll get clarification on as the company starts its conference call at at 9 a.m., just some time from now. So expect the stock to open in the green, but the gains would be perhaps limited.
Okay, so what do you say? Was it a good day for Britannia, or you think it's 50-50?
Good day on the P&L and 50-50 on the balance sheet.
Okay, that summarizes it well. Thanks for that. Let's go over to Ekta now. She's tracking Cipla this morning. Ekta, over to you.
Thanks for that. Well, yes, Cipla will be reacting to its conference call takeaways, and I don't expect a big bang reaction really, because it was largely an inline set of numbers. Quarterly US revenue did very well. That was on the back of the cancer drug Revlimid generic contributing. But an important point is $175 to $180 million could be a base for the US business going forward in terms of sales, so that's important. They aim to launch the inhalation drug Advair generic in the second half of FY23. Brixon, which is a cancer drug, the generic version, could be delayed because of the Goa plant. That's what analysts are assuming. So the launch will be dependent on whether the Goa plant sees a clearance or not, but they've managed to site transfer it, so that's an important point. They've maintained the EBITDA guidance at around 21 to 22% for FY23. That's on Cipla, but just watch out for Zydus Life, because their Marico plant has now received an establishment inspection report with a voluntary action indicated status, which basically means that they can now successfully supply to the US from this particular plant, and they were issued a warning letter in 2019 which effectively would be lifted on account of this status. So positive news coming in for Zydus Life.
All right, thanks a lot for that. We're also tracking Interglobe Aviation this morning on the back of good numbers. In the sense, the revenue growth was very strong because things have come back. The whole space has opened up post-COVID. The margins continue to be under pressure, but that's because of higher fuel costs, forex, etc. But the yields, if you look at it, were very strong, up almost about 21% year on year, coming in at a little over 5 rupees. And that's something that the street has latched on to, hence I'm going with green there. Revenue growth has also been very good, 121% growth that we're looking at, although the operational performance is still under stress, and there is still a net loss that the company has posted in excess of 1,580 crores. UBS put out a note. They have a buy with a target price of 23.50. They say that the yields are holding out quite well, and the company could fly back into profitability Q3 onwards. Because, you know, things have improved, and even in a seasonally weak quarter, which was Q2, they had a decent operational performance, the highest ever ASK with the plant load factors coming in at 79.1%. The yields continue to remain very strong, and the key con call highlights was that demand is strong, and the higher fares that you see, I mean, even if you take a Bombay-Bangalore, Bombay-Delhi flight, it's gone through the roof right now, but passengers are accepting those higher fares. So I guess that will result in better numbers.
You know, this one is incredible, right? I think if you just take a look at Indigo's quarterly numbers ever since listing and calculate, there's always something. There is, I mean, I think this time there was a big forex item, as usually there is for Indigo. But I think it would, I mean, there are very large losses, accumulated losses. But, you know, the faith absolutely sky high on this one. Especially from the institutional side. But this is an interesting time because you've got all these. Tata's is making a very aggressive bet, right? They've said they're going to spend some, 10,000, 15,000 crores on sort of upgrading their fleet, buying new planes. So competition is also coming up for the number one player right now, which is Indigo. So we'll see.
Yeah, escalating prices is a big thing. I mean, I was just looking at the Bombay-Bangalore flights on a Monday for 18,000. A return flight. Okay. I mean, but it's crazy, right?
Yeah, it's gone through the roof. Absolutely.
All right, let's get back to our top 10 stocks. And Mangalam is standing by to tell us about Marico. Mangalam?
Well, as far as Marico is concerned, just take a look at their numbers. Can't be more in line than this. 2496 crores on the top line. The street was working with 2490 crores. 433 on the EBITDA. The street was working with a number of 435. And the net profit just over 300 crores, exactly in line with what the street was working with. There was a mild beat in the domestic volume growth, 3% versus expectations of 1 to 2 odd %. But the important part is year-on-year gross margins have improved, even if they've decreased a little quarter-on-quarter because of high-cost inventory. And that the company believes will improve sequentially going forward as well. In fact, in the second half of this year, they believe that mid-single-digit volume growth will continue, and they maintain margin aspiration of anywhere between 18 to 19% for this entire year. So in the second half, the outlook is positive. Let's see where the stock goes today.
Okay, and we're also tracking TVS Motor this morning because the numbers were very good. They were it was a very strong performance. The revenues were higher than estimated. Over 28% growth is what we saw. The volumes went up about 12.5%. More importantly, it's the fourth consecutive quarter of 10% plus margins for Hero MotoCorp. So that's something that the street will definitely like. Across the board, if you look at the internals, they have improved for TVS Motor, of the volume trends, the margin trends, and the management commentary has also been quite positive. If you look at those bar chart over there, volume has gone up substantially compared to the preceding 4 quarters, and similar is the case with the margins, 4 quarters of 10% plus margins. Where is this coming from? The management says that the premium end of the motorcycle market has improved quarter on quarter. In fact, they couldn't meet the full demand because of a limited semiconductor availability. So Q3 onwards, the supply constraints will ease. They will be able to meet full demand and realize the full potential, which means that the earnings will further improve in Q3. They've also made higher investments in all their key brands with the launch of the TVS Ronin and the new TVS iQube Electric, which has been doing phenomenally well. So I'm going with green on TVS Motor. The only problem is the stock has run up quite a bit. But Bank of Baroda is the other set of good numbers that we had. Abhishek is here with the latest. Abhishek.
Well, Sonia, it was a stellar set of numbers given the fact that ROA is again like SBI at 1% perhaps for the first time in last 7-8 years, and ROE at about 19.6% is perhaps one of the best that you are seeing in many years. So highest ever quarterly profit recorded by the bank at 3,300 odd crores. The net interest margin is one of the best in last 30 quarters, coming in at 3.33%. It has a one-off in this quarter. However, it is expected to sustain going ahead. So domestic net interest margin is one of the best in last 30 quarters, and international net interest margin has crossed the 2% level at about 2.17%. Perhaps for the first time that I am seeing an Indian bank having an international net interest margin of more than 2% in last 10 to 15 years. So gross NPA ratio is one of the lowest in last 29 quarters. Net NPA ratio is one of the lowest in last 30 quarters. Loan growth has been pretty robust at 19% YOY and about 4% sequentially, largely led by the international loan growth, which has been about 41.5% YOY and about 8.5% sequentially. So strong beat to our number. The numbers that they have reported have been a beat of about 14-15% to our NII estimate and about 30% beat to our PAT estimate. Back to you.
Thanks a lot for that, Abhishek. Well, Vaisa is back with us. Vaisa, tell us about Cummins.
Well, for Cummins India, excellent set of numbers coming in for Q2 FY23. All-round beat versus the CNBC-TV18 poll. The revenues were up 13%, though on the margins front, some pressure, though better than estimates. Margins came in at 14.8% versus estimated 14.1%. Domestic sales were up 11% year-on-year. Exports were better off 21% and contributed approximately 531 crores. The management says there is a sustained demand visibility across domestic and exports end market, but the management is cautiously optimistic on short to medium term demand. There's also been a strong performance in power generation within India, which contributes to the improved outlook. We await for more details in the con call, which is to be held today at 10.
Okay, thanks a lot for that. A lot of con calls to listen to later today, and we'll get you the key highlights from all of them. A quick recap in case you missed out on any of the stocks. Of course, SBI, Titan, Power Grid, Britannia, Cipla, Interglobe, Marico, TVS, all reacted to their numbers positively. Bank of Baroda and Cummins. Guess what? No stock in our top 10 list that's likely to open in the red, but let's see how it goes. Let's also get a quick handle on the world of commodities. Manisha Gupta is joining in to tell us more about that. Manisha, good morning.